Sim.
David.
Sim has been incredibly patient. He's been here all day. He's listened to every panel. So I want to thank him so much for that. Naledi Pandor was here last year. She was also the last speaker. She stayed for every single panel. So it's obviously it's a South African thing. So very quickly, you were born in KwaZulu-Natal in 1967. I can't believe that you were born in 67. You look too young, but you grew up.
I'm thoroughly middle-aged, so don't worry.
You grew up in Soweto. We've spoken many, many times on the phone and over Zoom and all sorts. I don't think we've ever spoken in person.
Well, it's a real privilege to meet somebody who writes about the Middle Ages, so this is fantastic.
He was saying, sorry, I wrote here that he was born in the depths of apartheid, and I think it's always worth remembering just what a absolutely vile, horrendous system that was, and however much we criticize South Africa today, I think it's always worth just remembering where the hell it came from. He was able to study at Rhodes University, later at Notre Dame in the US. He's had more than 22 years of banking experience. He's sat atop his organization for a decade of that time. His organization is the biggest bank in Africa by assets, I guess.
Indeed, and soon to be by market capitalization.
And soon to be by market cap. Okay. Stock predictions. Stocks go up, down, as well as up. Now, there's a lot to ask to talk about, and Sim has provided me actually with some very interesting topics, and I've taken him up on some of them. So first of all, we have been quite down on South Africa. I have been quite down on South Africa. Sim thinks that the death of the South African economy, as he puts it, is exaggerated. So tell me why. Why do you think that South Africa is doing better? Why are there signs of green shoots that we're not seeing or that we're not noticing?
Yeah, David, there's a lot to be annoyed about South Africa, whether it be elements of labor policy, whether it be trade policy, sometimes foreign policy, and so forth. So there's a lot to be unhappy about, but there's certainly a lot to be excited about. And you've accused me of being an optimist, and I've pleaded guilty to the charge. Quite optimistic about the country. So firstly, just in Marrakesh, the IMF revised GDP growth for South Africa for 2023 to 0.9. It's one of the few countries where they've done that. Everybody else has been revised downwards, including many countries on our beloved continent. Secondly, the economy in South Africa is incredibly resilient. One data point is a study done by the Swiss Re Institute, which measured a whole slew of countries and reckons South Africa is as resilient, if not more resilient, than a number of many European and global countries, including Spain, India, Russia, and the list is long. The next thing to consider is the strength of South African institutions. And being in finance, I'll talk about two, clearly my favorite ones. The one is the National Treasury. It is ranked second in the world and has been consistently ranked in the top 3 after New Zealand for budget transparency, which is an important element of how one explains the Africa risk perception premium, which I'm sure we'll talk about a little later. The central bank on monetary policy was amongst the first to step forward and deal with what they perceive to be a global problem on inflation. And our governor, Lesetja Kganyago, is one of the most dapper people you'll ever come across.
I've met him many times.
He's quite a character. He is rated A-. He's one of the 20 top-rated governors in the world, ahead of many, including this lovely nation that I have the privilege of being at today. So strong institutions, strong economic policy, and a huge focus at the moment to dealing with an a number of major structural reforms that are necessary to generate growth. Firstly, on electricity, 10% of capacity was taken off the grid in the first 6 months of the year. A huge investment by households and corporates in distributed power. Secondly, on transportation and logistics, a deal has been done with an international player to run with Durban Port and Pier 2, and that port takes about 46% of South African movement of goods, of port activity. That's being addressed. Thirdly, crime. Neil Froneman, as part of the arrangement between government and business, is leading our charge as business in dealing with crime. And I do know that my friend Martin Kingston, who also thinks that I'm a crazy optimist, is here. And he will attest to the fact that an incredible amount of work is being done in partnership between government and business. And there are signs that, as I say, that the death of the South African economy has been exaggerated. It's been called too soon. The other areas of structural reforms, the spectrum has been released. We're now rolling out 4G. The telcos have been borrowing, and we are pleased to lend to them. They've been building out their towers, building out fiber. Water, the water sector is also being addressed. And so, in summary, and perhaps let me stop there, there are things being done to address the structural reforms necessary to give rise to long-term growth. The green shoots are there, and our economists, if I may just end by saying, have been saying throughout the year that they project growth of 0.8%, whereas others have said it will be close to zero. It's going to be likely close to 1%.
Okay. I mean, I could push back a bit, but I won't.
Because I'll push back. I'll push back to you.
Because I don't want a conversation about South Africa specifically. You know, I mean, I'd be much happier if it was growing at 5%, because then I think you could do so much more socially, you know, which just still desperately needs to be done.
That is the tragedy, that is the South African story. The electricity problem wipes off about 2%, 2 percentage points. So you're right, we should be at 5%. And yeah, we should be doing everything we can to get ourselves there.
We may just go back to that, but let's put that aside. One of the strengths that South Africa does have, it has some very strong companies.
Yeah.
You're one of them. I mean, without being, you're surprisingly profitable. I mean, I remember calling you not long. Well, I think maybe in the depths of the the pandemic.
Yeah.
You'd provisioned quite heavily. You'd managed to stay quite profitable. Your return on capital was good. Just without it being an advertisement, tell us a little bit about how you and other banks in South Africa have managed to be so profitable.
For sure. So let's start just at the highest level. One of the strengths of the South African banking system is the fact that it is so well regulated. And as I said, we're very proud of that. We've executed Basel III, and in fact, we implemented it together with Canada, Australia, and a number of other countries by the beginning of this year. Firstly. Secondly, it is fiercely competitive. Our rivals, we do have beers with them in the bar from time to time, but on the field, we try and beat each other up. And we compete fiercely with one another, and it's a very, very fierce financial system. In our case, we were up at half year by 35%, with a return on equity of 18.9%. We did a quarterly announcement just this morning, where we announced that we were up 30% in the third quarter. So we're likely to be up significantly in the year of 2023. We have got a large balance sheet, over $160 billion. We have got a capital adequacy ratio of 13.4, and so we've got a lot of firepower to do what is necessary to support our clients.
And the turn in the interest rate environment is like hell for everybody else, but it's good for you lot, isn't it?
Our balance sheet, so we are very much a lending bank. And yeah, you are right. Our net interest income was up roughly 23%, benefiting from the increase in interest rates. As interest rates abate, of course, that growth slows down. But then we've also stood by our clients. So one of the things I did say to you was that even in the most difficult times, we would stand shoulder to shoulder with our clients and support them, which we did, as a result of which our balance sheet expanded, and it continues to expand.
By the way, we've not been good at bringing the audience in, so I am going to ask for a couple of questions towards the end. So if anyone has got some pointed questions, please think of them now. I wanted to ask you about this cost of capital question, the so-called African premium. I sort of oscillate on this. I've worked now for the FT for years, and although I didn't necessarily enter the FT in this way, for years and years I've been told markets are efficient. I can see where they're not efficient. I can see where there've been huge market failures. But what we're asking to believe is that there's this massive market failure that a company, Africa Works, we were told earlier, 3 times better performing than its peers, and yet it had to pay 4 times the capital. I think that was the we're hearing that a sovereign is rated exactly the same as another sovereign, say Greece, and is having to pay 300 basis points higher, which is obviously unsustainable. First of all, what is going on? Is there a prejudice? Because if there is, this is what we're saying is that the financial markets are somehow racist. They're somehow, there is this location bias. What is going on here, in your opinion?
David, I don't know, but let's just look at the data. And a couple of panelists earlier on did make this point. In which world is South Africa a bigger risk than Brazil because of poor institutions? It just makes no sense. So similar countries, similarly rated, and we pay a premium. Somebody called Argentina, I didn't call them, but somebody said Argentina is a serial defaulter. They've defaulted 9 times. Angola has not defaulted since the liberation struggle, since the independence. Yet, in 2017, Argentina issued a bond, 100-year bond, nogal, century, a perpetual, at 7%. Angola, a couple of months later, issued a 30-year bond at 9%. Something's going on. Kenya, I was in Kenya last week. They issued a bond also more expensively than did Bolivia. Again, in which world is Kenya less transparent, less well-run than Bolivia? So something is going on. There's a paper written by the IMF's economist, I think it was done in June. It is called exactly that, the Sub-Saharan Perception Risk Premium, the missing factors. And it concludes that the missing factors are something like this. 1, perhaps not sufficient and good enough communication. And I'll come back to that in respect of Kenya, in fact. 2nd, insufficiently deep financial markets. 3rd, lack of budget transparency. 4th, too big a informal sector. So not enough depth. Financial market participants can't get out of positions if they want to get out of them. Lack of transparency in budget. People don't really know and don't believe the numbers being produced by the authorities. Too big a informal sector. Well, not enough tax being collected as a consequence. So how do Africans address this? I would submit by being more transparent in their budgets. And let's use the Kenyan example. Kenya, there are 24, the bond that matures just now in 2024 was yielding, as of 11 a.m. on Friday, it was yielding roughly 19%. In Marrakesh, the Minister of Finance, together with the central bank governor, standing shoulder to shoulder, addressed investors. following up on the budget that had been issued, and explained in some detail what they were doing in the space of consolidation, what they were doing on liability management, what they were doing in terms of monetary policy. As you know, the central bank increased interest rates by 100 basis points in June. They're roughly 10.5% at the moment, and they have exercised their independence, and they continue to do that. Central bank explained this in detail to the investment community. By noon, those bonds were yielding 14.5%. And this morning, I haven't checked since this morning, they're still roughly 14.5%. I mean, close to 5% improvement as a consequence of just clarity, explanation. People now have got confidence that the bond that matures then in 2024, there will be liquidity for the country to meet its obligations.
So let me ask, do you think that this fear of a kind of a domino effect of sovereign defaults, again, is that exaggerated?
It's exaggerated. I mean, we spoke about Zambia. Somebody spoke about Zambia. There was a risk on Zambia. There's perhaps a risk on Malawi. But anybody who believes that Nigeria is close to default, just the facts don't support that. Anybody who believes the debt to GDP ratio of South Africa is high, but if you believe South Africa is going to default, I mean, that's just not going to happen. And so my sense is that fear and that risk has receded. Just the facts don't support that fear.
Okay, let's bring in the audience. Question there. Please make your questions quick and pointed. And another one here from Aubrey. Maybe we'll take two, actually. So, yeah.
I'm a fellow South African. I haven't been planted yet. A quick 2 for 1. The African Union said they're going to pursue an African credit ratings agency. Is this something that you support and your fellow peers, banking peers, support? The second is, I understand that your personal exposure is entirely African. Any good stock picks or countries you would suggest investing in?
Okay, as there were two, we'll just take those quick and then we'll go to Aubrey here.
I would support the continued improvement and deepening in the African financial sector. And having a credit rating agency that is African would be a good thing. But it just has to compete with everybody else in terms of the quality of its work, the quality of its models, the quality of its people, and the credibility of its outputs. On a serious note, in terms of the African continent, if you just survey what is happening, you have to believe that East Africa is the best performing. If you look at what has happened since 2000, just the increase in productivity, the increase, the hockey stick graph of GDP per capita for Kenya and East Africa generally is startling. Like all hockey sticks, it's just about $500 per annum until roughly 2000, and then it just vertiginous growth since 2000. Now, GDP per capita is still very low at roughly 2000, but if it continues on this pace, it's going to be very exciting. The region is increasingly integrated. It's easy to move goods, people, ideas, capital around in that region. It's calculated that region will be roughly 500 million people in the next decade or so. GDP of close to $1 trillion, especially if you include DRC in that calculation. The people there are getting better educated. Kenya's starting to export its human capital. It's an incredibly exciting region.
So by Kenya, sorry. I don't know if Kenya's listed, but if it is...
well, the country, yeah, you've got to be exposed to the country.
Aubrey.
Yeah, thank you so much for those thoughts. Question about the African banking sector as a whole, and I realize you'd be commenting on some of your competitors, but the criticisms are such that many of the banks, we all use the word bank, but many of them are buying government paper, and they lend to the top 12 corporates, and retail banking expansion is not core to their DNA. Now that's different in South Africa, but I'm speaking about the sector broadly. We just sat through the VC panel, and I'm wondering how you think about the growth of digital banking and digital banks. There's basically not corporate venture outside of South Africa in terms of corporate venture from your own bank and investing in disruptive fintech players. And how do we actually move, say, in a country like Nigeria, of getting 60 million unbanked actually banked? And so how does the bank sector as a whole play those roles?
Good question. If I can put it just a slightly different way, aren't these guys going to eat your lunch, and should they not be eating your lunch?
There was a time when that theory was ubiquitous. At the moment, we're sharing lunch because we're playing each to our strengths. It is true that fintechs, because they're usually narrowly focused, they're well-funded often, and their ideas meet particular needs, particularly in wallets, for example, that they do add value. And in fact, they do contribute to financial deepening. So I will grant you that. Our job, however, as a commercial bank is actually the gathering of liabilities and advancing those liabilities to people in the nature of loans and making sure and being absolutely certain, not risky, absolutely certain that we will repay those deposits when they fall due. So we're not a venture capitalist. We're commercial bankers, and when we're accused of being conservative, we plead guilty as charged. Because it's not our mandate to take those risks. Our mandate is when you want your payment to pay for lunch at Claridge's, you want the card to pay, and not people to tell you to wait for a couple of days or a few weeks. And that explains that logic. In terms of financial deepening and financial inclusion, working in partnership with DFIs, telcos, and fintechs, we do work at finding solutions. But I just want to underline that fact that certainly our institution does not see our mandate as financial deepening. Our mandate is to gather liabilities and to repay them when people demand them from us. And it's other parts of society that have a duty to effect financial deepening.
Okay. I have one final question, really in an attempt to kind of bring this whole day together.
Yeah.
This is Africa in a complex world. The world is complicated. I don't think this is a journalistic trope.
Yeah.
I mean, I think that there's more going on right now, whether it's AI, whether it's the breakdown of a system that appeared to be steady as she goes, whether it's wars breaking out in Ukraine, now in the Middle East, inflation, pandemics.
Yeah.
It's a complicated world. Where does Africa fit here? Is it all, I mean, clearly it's bad news in a sense, but I mean, are there also ways that the continent can play this cleverly?
So I would submit to you that if the last century was the European century, and this century was potentially the Asian century, it is arguably the African century. Thank you.
You got an easy audience.
I love this audience. I think she's South African, but that's... But what are the secular trends? And the summary is Africa is actually the bright spot in the world. Africa is going to grow at 4%, according to the IMF, until 2030. And after that is likely to grow even faster. The African population is going to get younger, healthier, more productive. In that context, McKinsey has issued an interesting paper where one of their propositions is that if Africa grows, it grew at roughly 5% from around 2000 to 2010. If it reverts to that growth, consumption expenditure could be at $3 trillion. So that's the one proposition. The second one is Africa needs infrastructure in the nature of logistics and power, roughly $3.4 trillion. That is a vast amount of money. And it can be forthcoming if we become more productive, improve the ease of doing business, do the things I was referring to, and use the Kenyan example. If you are a business that faces either consumers or infrastructure or corporates, you are bound to make a massive contribution and make a lot of money in that process. So the secular trends, deglobalization, the population, the demographic dividend, which Mo was denigrating, is definitely, I'm in the team that is not Malthusian, that believes that demographic dividend is going to be good for Africa. The world is getting older and less productive. The price of capital is going to go up. That's why inflation is going to be higher for longer. Africa is going to be the place to be invested in because of a younger population and because of the labor argument. And we will be taking up the value chains that have been disrupted in other parts of the world and will be contributing to global growth. And thirdly, just lastly, on climate change, we have an incredible opportunity to provide contributions both to mitigation and adaptation, and in the space of adaptation, use all our resources to make the lives of African people better, and yet also contribute to greening the environment. It's an exciting time for the African continent.
Okay, I think there's no better place than to end there. Thank you so much, Sim.
Thank you, David.